Mahindra Finance is all set to report its Q2FY21 earnings. Taking a look at the ET-Now poll, well, as far as the net interest income is concerned, we expect it to show a growth of about 9%, standing and coming in at about 1,400 odd crore rupees. While coming to the profits, it is expected to witness just an uptick of 1.3% on a YY basis. Well, we expect profit after tax for Q2 to be at around 255 crore rupees. Well, the slight uptick is owing to the fact that provisions will continue to remain at an elevated level in this quarter as well. Well, as far as the pre-provision operating profit is concerned, it's expected to show a healthy growth of 25% on a YY basis. Well, having said that, we are seeing really strong recovery as far as the rural economy is concerned, and all the players that are rural focused are definitely gaining and from the kind of better recovery that has been witnessed in the rural areas. Well, given Mahindra Finance is also a rural focused player, we expect the company to show a good amount of sequential uptick as far as disbursements are concerned. But on a month-on-month basis, the disbursements did definitely look on an improving trajectory. So we expect this to be slightly better for Mahindra Finance, given the rural, it's morely a rural based company. However, the AUM growth is likely to remain flat. Well, another aspect is that we may see encouraging growth momentum and improving growth momentum given the kind of recovery we have seen in the auto sales number. In the last few months, we did see that the auto sales number have witnessed a good growth, particularly the tractor segments. And given the company is a tractor financer, would definitely benefit from this up move. Well, in fact, the analysts expect and say that Mahindra Finance could surprise on strong tractor volumes and revival in other segments. Well, in terms of management commentary, we're eagerly watching out on the trends as far as the recovery of demand is concerned, and if this demand recovery is translating well in terms of disbursements. The company has been witnessing improving signs of collections, but what is the kind of collection efficiency as of September, and what is the update on restructuring going forward, and if any of it could translate into some amount of stress on the books is something that we'll have to watch out for. Also, their outlook on funding cost and margins, is there a scope and a case for margins to expand from current levels, and also the changes in product mix, particularly owing to the fact that tractor demand has particularly remained very strong. So should we expect a bias towards tractors as far as the product mix is concerned? However, the company has always maintained that they have a balanced product approach. So it's something that we'll have to really watch out for. CV segment continues to remain a laggard, but however, things seem to be on an improving trajectory across segments. Well, as far as we remember in our interaction, Ramesh Iyer lastly had mentioned that August continued to show a good recovery on back of good farm cash flows, and sentiments in the rural areas remain positive given the monsoon was good. He expects normalcy to kick in from Q4 of this fiscal. Lastly, he also added that there's a lot of buoyancy in the rural markets, and he expects much more action with the onset of festival season. Going forward, the infra cash flows will also provide a great support to the rural economy. So these are all the factors that would play out as far as Mahindra Finance is concerned.